I am really quite frustrated recently with the damage that's being done to the economy, not just in the UK, but around the world. Previous promises made by this now Labour government when they were in opposition, promises that have not been kept, and the fact that they appear to have no real business experience between them, and yet they are purporting to know what's best for businesses, when the reality is businesses are telling me, and one business I'll show you in a moment, who produced a report of what they will have to do to eliminate the additional costs of employer national insurance that's being imposed in April by this Labour government, and has set those figures out. And don't forget, if you haven't noticed, we're here on my money channel. Please do subscribe to the channel. I thank you all for subscribing yesterday to push me past 30,000. I am so grateful for that. Please do subscribe and let's make it happen. But also, I've been speaking to people recently about their council taxes going up across the country, despite the promises that they would not do so. For example, this was Keir Starmer. I'm quite frustrated with some of the newspapers in how they report this. They say, well, that was just for that year and the following year, and not this year. It doesn't cover this year. But if you see everybody behind Keir Starmer here clapping and applauding at his promises, quite clearly, definitively saying if they get into power, not a penny more on the council tax. But hear it for yourself. And in my view, it was just to get the votes. It was never really actually going to be possible. Listen to this.
Not a penny more on your council tax. Not a penny more than the bill you paid last year. And that is a tax cut for the 99% of working people, compared with the tax percent.
So everybody's applauding this because that's what they want. They want to hear, or they wanted to hear, that there would be no more money on the council tax. But actually, that's what's happening. Now, in the vast majority of cases, it's going up at least by the 5% that they're allowed, which in itself is a bit odd because it's split by 3% and 2%, and the 2% is an additional that not every council really should need, but they go by that full 5%. Anything over that, they either need a referendum to get permission and agreement from the local community that they want it to go above 5%. Who's going to vote for that? And otherwise, they get permission directly from the government, which is what they're doing, and it's going up at 10, 15%, 16% in many cases, and across the country. And not only that, I've been speaking to people in the last few days who have not had their bins collected in over 6 weeks now, despite the fact that they are paying more on their council tax. So all of this is just not working. And also, I get messages like this one from someone who runs a business and says, hi, Daniel, I prepared this looking at Reeves' April tax grab, which will fail. This is someone who runs a business with 100 staff, all over 21 or over, show what effect, he says, this tax on businesses will have, and show how it may backfire on Rachel from accounts, as she's being referred to. So these are before and after figures. Tax grab on businesses. Reeves' misguided £25 billion tax grab from April. Now, obviously, she anticipates gaining £25 billion from this, but this is an example. Business has 100 employees, all aged 21 and over. The old rates, adding all of those together, the wage bill before at the old rates is £2.5 million. With the new rates, with all of the increases and the change in the landscape, this would be £2.8 million, which is an increase of £252,000. And so to pay the £250,000, have to lay off 10 employees to save £274,000. So Reeves is not going to receive this £25 billion, as businesses are likely to just cut staff to reduce these costs, and therefore the unemployment is going to rise, and they're going to cut out these costs by doing this. Now, caveat, I haven't done the calculations based on these figures, but very broadly speaking, it looks reasonably correct. In fact, I think it probably looks like there's going to be a larger increase than is shown here, but I don't know how they've been calculated. But very broadly, the logic is sound. And with the increase, these companies are very likely to try to cut those costs. And we've seen reported hundreds of thousands of jobs are at risk, either of being cut entirely or having their hours cut because of the increase. Now, the frustration for me comes from the fact that they don't seem to have real business experience, and they seem to think that by taxing these businesses, it's somehow going to spark business growth. And that's just not going to happen. And not only that, we have Keir Starmer talking about the prospect of war and involving the UK in conflict. And obviously, we've had Donald Trump coming into office, and the whole world really is on the brink of conflict, and that's had an effect on stock markets. And so you can see even Apple, you can see in the recent, this is a one year, this is year to date, 6 months, you can see a sharp drop just here in the last 6 months. Tesla, as we know, Tesla's taken quite the hit because of Elon Musk's involvement with Donald Trump. Since January, you can see what's happened to the stock here. But actually, I'll come back to this in a moment. Even Microsoft, year to date, you can see that there's a drop. For the last 6 months, again, you can see there's a drop. The FTSE 100, you can see had a drop, but it's bounced back a little bit since the beginning of March. This is year to date. And actually, the last 6 months looks reasonably okay. So coming back to Tesla here. Now, if you look at this, obviously, you can see a 6 months, you can see quite the drop. But if we zoom out a little bit, now this is my sort of positive spin for this video, really, because what really frustrates me is people getting really desperate in their mind for saving money and, starting a business or investing in stocks or investing in their retirement and all these kind of things. And so looking at these, I would urge people to look at the long term, which is and has always been the best way of looking at building wealth, is to look long term. Because anything short term, I believe if something is quick to come, it's quick to leave. So I think you should be looking for long term. So with that in mind, if you look at these stocks and things like this here, whilst the 6 month looks pretty grim, particularly for Tesla. But if we zoom out to 5 years and then for the maximum allowed here, you can see right back to 2020 here is when the company really took off. Now you can see that it is quite the dramatic drop at the end here, but you can see on the whole, it is still in a relatively healthy position. And so actually, when you look at things like that, and when you look at big tech companies that have taken a hit, but if you zoom out and you see, on the whole, the long-term picture is a positive one, particularly for Apple here. So if you look long-term, now it might seem like a boring investment. This is not investment advice, obviously, but when you look at a investment like this, it may seem like a boring one because they are big, solid companies, etc. And it's not a get-rich-very-quick scheme, certainly not. But when you look at the long term of these things, they are still going to be solid investments. And in fact, when you have situations like this where everything is in turmoil, everyone is in panic, there's a lot of discord in your country, around the world, that is actually a great time to look for these investments or look for opportunities. A lot of the best businesses are started during these really difficult times. I started a business, for example, in the 2008 financial crisis, and that business is still around today. And in fact, I remember having conversations with the bank to open an account and then give me a payment terminal. I really had to convince the banks to give me the payment terminal. They didn't want to do so because my business at the time was going to rely heavily on the internet. Now, the internet was still, even then, it was not what it is today. It was still relatively early then. And so convincing the banks that it was a safe proposition to open an account for what I was doing, to be selling things via the internet, and I wanted to take payments via the internet, or what they allowed me to do initially was have a payment terminal which was connected to the phone line, and every day it would poll through, and the phone would ring, it would hit the machine, it would poll through. But we started that business during the financial crisis, and because the times were difficult then, we made the best of it, and we absolutely made that work. And so whether you're starting a business, whether you're investing in stocks or looking to invest in your future, actually, when the markets are hit, when the markets are struggling, when the markets are down, not all of them, but many of them are struggling at the moment, that is a great time to invest. Because if you look at this, if we take Tesla, for example, I firmly believe, Tesla is not going anywhere. It's going to bounce back because it is a solid company with solid products, etc. Now, you can love or hate Elon Musk. It matters not really. Investments and planning things like this should be completely emotionless. It's not really whether you like the person. It's whether the company has a solid product, a solid base, a solid future, etc. And the way that they are doing things in the long term, in my view, is going to work. So if you were to take this as the example, if you look at the share price as it is now, it went down to $222, is now back up to $249. But if you look back to December 18th, it was up at $440. Now, obviously, if you invested all of your money into one company and it drops, that can be a devastating state of mind to be in. Now, you can read about this day and night, and many people will then end up looking at fund managers to invest for them, which if you look at those who actually succeed in what they do, much of the information is available for free. Most of this you can do yourself. Most fund managers just simply underperform compared to passive index funds, for example. These fund managers are going to charge fees regardless of the performance. That will chop out of any profits that you make in the long term anyway. Studies also show that they don't generally beat the market in the long term. And invariably what they tend to do is pick all of the stocks based on past performance, which broadly speaking is not reliable. What you are probably much better doing is investing independently across a range of different stocks so that you're managing the risks. It's not all in one place. You can filter what you look at, so you can look at things such as the value, the growth, and the income over time and the cash flow of the business to get an idea. Obviously, investing over the longer term, as I said, means that the earlier you start, the better. So if you haven't done it yet, then you should start as soon as possible. You should ideally pick a time frame, for example, 12 months at least, to hold on to stocks. Therefore, you're not relying on the short-term volatility of these things. And if you like the idea of the fund managers, but you don't like the idea of paying many of the fees, then look at things like index funds. And since most of these fund managers are not going to outperform the market anyway and beat any of the benchmarks, then investing in passive index funds is possibly a much better way to do it. There's a lot of great and free information out there. I'll link some below. Very often, the best information is either free or it's in a book, which will cost you £5-10 or $10-15 or whatever. So I'll link a few things in the description. And since we're on my money channel, let me know in the comments below where you're at the moment, what you're looking to do, what you'd like to talk about, and we'll help you get there. So with that, please stay positive. When times are difficult, that's often the best place to get started if you haven't got started already. And if you have been investing, then don't get spooked, because the long term really is the strategy for creating wealth. So I hope you found that somewhat reassuring in these difficult times. Please do subscribe to the channel. And as always, thank you for watching.